with our slides. Let's see. So what, if you were to describe to somebody what this formula was as a synopsis, what would you tell them? What is that? Huh? Yeah, it's a tax formula. It's really the whole entire 1040, isn't it? What's the bottom number on the first page and the top number on the second page? Right, and what are we calling that? AGI. Okay, so SE is SE tax, AGI is adjusted gross income, TI is taxable income. What are exemptions again? Very good. You get one for yourself, personal exemption, and then you get one for each dependent. So we need to figure out what dependents are. And there's two different tests, qualifying child, and then qualifying relative, which is everybody else. So I might have a nephew or an auntie or even an unrelated human being. And they may pass the qualifying relative test and be one of my dependents. So we're going to take a look at that today too. Okay. I can't even see the page down button here. So, first question, does everybody have to file a tax return? You only have to file a tax return if you have taxable income. Or there's some special situations where you have to file, like you don't have taxable income for income tax purposes, but you've got to pay self-employment tax. Okay, so basically, if your income is more than the sum of your exemptions and your standard or itemized deductions, then you got TI, right? That's just math. So if you come to me and you're like, I'm single, I don't have any kids, right away I think 4,050 because that's your exemption. And standard deduction is what, 63? So I'm at $10,350, right? And you give me your W-2 and it says $8,000 on it. Do I have to file for you? I look at your W-2, I see $8,000. Do I have to file? No, but I'm going to file if there's a number in what box? If you had some withholding, right? If you had some FIT withholding, you want your money back, right? So you don't have to file, but you're going to file to get back your $196 they held out, right? Okay. So, but you don't have to file unless your income exceeds the total of your standard or itemized plus your exemptions. Now, this gets a little trickier. So, you are under 24, which you don't know what that means yet, but you can still be your parents' dependent if you're a full-time college student up through 24. So say you're 20 and you made $5,000 last summer, but your parents claim you as a dependent because they still pay more than 50% of your upkeep. Do you have to file a tax return? You got to follow the second bullet. If a taxpayer is claimed as a dependent on another taxpayer's return, i.e. my 20-year-old in college, their standard deduction is the greater of $1,050 for earned income plus $350. What does that mean? So I just gave you an example. Kid made $5,000 over the summer. What's his or her standard deduction? 5,000 because, well, 5,350 actually, earned income plus 350. Do you get your exemption? No, your folks who claimed you get your exemption. Okay. So when I ask you questions about does a dependent have to file a tax return, you have to go back and do this math. The math, or the overall concept's still the same. Your income has to be greater than your deduction plus your exemption. Your exemption is zero if someone else claims you. And your deduction is based, excuse me, on this formula. What if my kid made $15,000? Did they get $15,350 as their standard deduction? No, because it can never be more than your standard deduction, right? Regular standard deduction, which is $6,300. Question? You absolutely, in this class, there's so much information.
So then he gets the standard deduction.
One more time.
So
then you would get $6,300. You absolutely have to clarify as we go along. You are not going to remember everything that I say. That's why I'm taping all this. I would heartily recommend that if you feel like, oh my God, we covered so much, that's why it's taped, okay? I recognize there's a lot of information. Then we've got these weird special taxes. I'm not going to spend a ton of time on this. In other words, I don't have any taxable income, so the total of my standard deduction and my exemption exceeds my gross income. I don't really have TI, but I owe some weird special tax like, remember tips, where you have allocated tips because you didn't report enough, right? I've got to pay tax on that, like something weird like that, then I've still got to file a tax return, even if I don't have TI. Okay, and then self-employment income over 400 bucks, always. So this happens to me all the time. I've got a guy who's he does a ton of odd jobs. He lives up in Arlee in a converted bus, and I mean, he's alternative lifestyle, whatever. But he files tax return every year. And, he sold a couple grand in engine parts, and he worked on a car, and he did some drywalling, and blah, blah, blah. We put it all together, and he made $6,000, and he lives on it. And he bought stuff in our league. Does he have to file a tax return? Does he have taxable income? The Schedule C says $6,000. Does he have taxable income? No, because standard deduction plus exemption is $10,350. No TI, does he have to file a tax return? Yeah, can you in your mind really quick calculate what the dude owes on 6,000? Yeah, you can. What's 15% of 6,000? 900. I can't get away confidential information. But yeah, it's free. So 6,000, 10% of 6,000 is what? 600. What's half of that? 300. 600 plus 300 is 900. You should be able to do that. Huh? Well, 10% is just move the decimal. I know, I get it. But what I'm saying is, he lives on $6,000 and guess what he owes? $900. Think he's got $900 sitting in his checking account based on the situation I just described? Probably not. Also, just as an aside, practice management with somebody like my buddy, you always get your feet up front. And you make sure the check cashes, and then you do his tax return. Okay. Huh? Yeah, I didn't really need drywall. I wanted too much. But trading is a really great thing, except for barter is taxable.
Yes, at the value of the services.
Absolutely. So this last year I did barter with a guy came in and did some masonry work for me. And I did, I filed for like 4 years. So I did like 4 years worth of tax returns. And you sit down on a piece of paper and say, well, what would you charge if you just walked in off the street before tax returns? $1,000. What are you going to charge to do work on my chimney? $1,500. Okay, so I paid him $500 in his tax returns. Is that taxable income to both of us? Absolutely. Barter income. Not traceable, but definitely taxable. Okay, take a second and look at this. So we've got Miles, he's 45, he's single, he's a waiter, and he has unreported tips of $1,510. That's all he made all year. Does he have to file? He's got allocated taxes, or allocated tips. He's got no TI. He's not going to pay any income tax, but he's got to pay on those tips that he didn't report. Okay, let's do this one. I'm going to just read you these because the answer is up there, so write this down. I've got a gal who's 31. She's blind. You should be writing this down because you're going to decide whether she has TI or not. She's 31, she's blind, and her W-2 says $10,350. Now, because we're all new at this, I'm going to remind you that standard deductions change in 2 situations. What are they? You're over 65, and if you're legally blind. Do you have your book yet, Carlos?
No.
So on the inside flap, it tells you what you have to do to the standard deduction to adjust it if you've got somebody over 65 ever blind. And it's for each one, isn't it? So if I'm blind and 70, I get that additional amount twice. Yay or nay?
No.
I don't think she has to file. Her standard deduction is what? 78.50 plus her exemption. Yeah. So she doesn't have to file a tax return. She would if they withheld FIT because she wants her money back. Right? But she's not legally obligated if she doesn't have any withholding to get back.
How much money does the government end up with the people who don't file because they don't have to, but they don't realize
I've
they
never seen that number.
involve, like,
You've got 3 years. That happens to me all the time. People come in and be like,
young college?
I don't make any money and I never file. And I'm like, you know what? Do you have your W-2s from prior years? Or I'll send them down to the IRS and they'll print them off for you. And I print them down and then they bring them to me because I don't want power to turn over all these kind of random people that don't know what they want. Anyways, they bring them to me and it's like, you look at it, it's like, oh, dude, you've got $1,900 coming. It just happened this year. I picked up a waitress from a little waitress from a little joint downtown. And she lives on a dime, she's a young gal, waiting tables, kind of bar. And I was like, you got I think it was like $2,800 coming back. She's like, oh my gosh, she hugged me, and then she bought a ticket to Australia to go see her new boyfriend. I'm like, that's a happy client. So yeah, but you got to do it within 3 years. Okay, so don't look at this one here. We've got 2 people. Let's go back to the last one. 67 and 69 years old. Write this down. 67 and 69 years old. They made $19,160 of gross income together. They got a file? Yes, good question. And when people are married, we will always assume MFJ unless I tell you MFS, married filing separately. Otherwise, we'll assume MFJ. What you think? So here's the thing, guys. Look at how much the standard deduction alone is $15,100, right? Because you have to add the $1,250 for each of them. They're both over 65, right? And then 2 exemptions. So they don't have TI though. They get to 23.2. Right? So no, they don't need to file. All right, let's scoot past this. Okay, this one's worth doing too. Now we got a guy, write this down, $7,340. He's a student, his parents claim him as a dependent. Does he need to file? That's not actually a good example because we know he doesn't get an exemption. And the most his standard deduction can be is $6,300, right? So yeah, he's got some taxable income. And I can tell you, that's about $1,000 of taxable income. He's in the 10% bracket. He's going to have about $100.
Parents owe some money.
Okay, filing statuses. This is pretty darn important. And oh, by the way, All of your testing in here is open everything, open book, open PowerPoint, open computer. Only thing you can't use is each other. So becoming familiar with your resources is imperative. How many filing statuses are there? Single, what else? Married, filing joint, married, filing separate, head of household, qualifying widow or widower. Single's pretty self-explanatory. If you're legally unmarried on 12/31, you're single. Married filing jointly, if you are married at midnight on 12/31, that is an option. If your spouse dies during the year, you married filing joint for the current year. Okay? And there's a little box at the top, deceased and dated out. So you married filing joint for the current year, which is a better tax bracket, obviously, and then you get 2 exemptions. Married filing separately, I think, what's the difference between Montana and feds again for MFS? Anyone remember? Which one do you want to do it for and which one do you not want to do it for? Separate on Montana. MFS for feds is almost, I mean, I've never seen never, but probably close to never, going to yield you a more desirable tax situation. The only time I ever see it, I just did one last year, it was a couple that was in the process of splitting up and had not yet divorced. Or people come together later in life with their own assets and kids and da-da-da-da, and they don't want to merge their money. And I tell them, you're going to end up spending another $3,000 or $4,000, you know, in federal and state taxes. And they're like, so be it. So then you do it. Montana, if you've got 2 earners, you almost always want to marry filing separately. If you've got 2 earners, now, and I said this on Thursday, and for some reason it takes a long time to sink in for people. Here is what you look at on Montana. When you get to the line on your Montana tax return called taxable income, TI. Do you remember how you get to Montana taxable income? Do we start with fed and adjusted, or do we just go recreate the whole thing? Yeah, we start with federal AGI and then we adjust it, right? We've got additions and reductions, things that are taxable in Montana but not for the feds and vice versa. And then we have a different standard deduction for Montana and we have a different exemption for Montana. Okay? And we have different itemized deductions for Montana. So that's all recreated. Then you get to Montana TI. If you've got, I already missed my smart words so much. If you've got 2 columns where you've got, you know, my husband and myself and you're doing all of your data, if you get to that line called taxable income and a person has a negative number, then you do not want to marry filing separately. How come? You're losing a loss, or you're losing a write-off, or you're losing part of exemption. So that is your number 1 review mechanism. When you look at your Montana tax return, and you look at that taxable income line, I think it's like 82 or something, and don't quote me on that, whatever line number it is on your tax return for Montana. Huh? No, it's like on the 3rd page of the Montana tax return. Do you have a full MT2? You look at that line, if that number is negative for either person, you don't want to file separately. Or you want to jack around some things, some components, like push all the deductions over to her. And you can do that on Montana. Make sure you understand what I'm saying. You can play with that with married filing separately on Montana. So if you and I are married and we've got a mortgage interest deduction of $25,000, and you make 80 and I make 40, I'm going to push that whole mortgage interest deduction over to your column. Okay? Our goal is to equalize taxable income between married couples. So you make 3 times what I do. I'm going to put all the kids on your side for exemptions. I'm going to give you the mortgage interest deduction and the charity and everything. And then if we have a little like interest and dividends, I'm going to put the income on my side and the write-offs on your side. Okay? Does that make sense that you want to equalize taxable income? That's going to minimize your tax bill or maximize your refund. Okay, and then the last two filing statuses, head of household. These are beneficial rates. Lower rates, you can file head of household if you were unmarried or abandoned. We talked about what that meant as of 12/31, and you pay more than 50% of the cost of keeping up the house for the principal residence of a dependent child or a qualifying relative. With the one exception. Can anybody remember what the exception is without reading it? There's one person that doesn't have to live in your house, and you can still get that a household. Your parents. So if you're unmarried on 12/31 and you pay more than half the cost of keeping up your pop's place and he lives in assisted living, you could, first off, you get him as a dependent, second off, you get head of household rates. But it's the same scenario, but you're paying for your disabled nephew to live at Eagle Lodge, no, you get him as a dependent, but you don't get head of household. They could just go live in your house.
I have a question on the marriage.
Yes, ma'am.
With the spouse passing away, there was something in the book about you can, if you have dependent children, you can still.
Yeah, and I don't know why that wasn't up there, thank you. So the fifth filing status is my spouse passes away this year. I've got dependent children at home, or up to 24 and so on, full-time college. I have dependent children. I can take qualifying widow or widower status for 2 years after the year of death. So if they die in 2017, I can still file surviving spouse or qualifying widow, widower, 2018, 2019.
As long as you have.
Only have dependents. And those are better tax values. Thank you for clarifying that. Here's your 7 brackets. We talked about qualifying dividends and net long-term capital gains taxed at lower rates. Exemptions, we've talked about these. You get one for yourself. You get one for every person that's a qualifying child or a qualifying relative. You get $4,050 a person. Now, what are the tests? There's 2 sets of tests, and you'll definitely want to know where these screens are because you need to meet all 5 tests if a child qualifies to be your dependent. Okay, or I'm sorry, 6 tests evidently. One file. So they have to meet these qualifications. Are my child, stepchild, adopted child, or sibling, half or step sibling, or descendant of any of these. Foster kids may also qualify. My child's got to be younger than me. I marry a older guy and he has a kid and the kid's older than me? No, unless permanently disabled. A lot of this stuff is just things that you see regularly. So, but it's just good to know in the back of your head because you look all this up, right? They have to have the same principal place of abode as me for more than half the year. So these marriage or divorce decrees, where they've got 50-50, how many days in a year are there? Can you split that right down the middle? No. You can't because tax law says they goes in 24-hour increments. So, guess what some people do? You got to log it. Joey and Susie haven't been, here's the dates. And that's literally the law mandates who gets that. Age test, the year a child turns 19, you lose them as a dependent unless they are a full-time student. That means that they take 50% or more load at least 5 months a year, and then you get them up until the year they turn 24. If you meet these other tests. Can't file a joint return unless they only do so to get back withholding taxes. They've got to be citizens all of the U.S., Canada, or Mexico, not just U.S. And if your child provides more than half of his or her own support, they can't be claimed as a dependent of someone else. And that's sort of a rude awakening to me. My older son's last year of college, he got this really kick-ass internship over the summer, and when I did the numbers, all of a sudden, and I mean, I was still paying for a bunch of college and everything, but still, when the numbers all penciled out, it's like, oh, I'm not providing more than half of this support. So I couldn't take him anymore, could I? And you don't know this yet, but you know what you lose when you lose the dependency? You lose the ability to take your education credits, higher ed credits. So that cost me about $4,000. American Opportunity Credit, I'm sure most of you have taken that or seen that, right, your higher education credits. You should be smiling and nodding. You guys know what I'm talking about? Oh, okay, you need to amend a tax return if you haven't been doing it. If you earn income, even if you don't earn income, you should be getting a grant that year from your American Education Opportunity Tax Credit. Uh-oh.
I know I read it last year about that.
Oh, my goodness. Okay. When we get to that, we will talk about that, because if you have not been taking that, you could have a couple $1,000 from that.
What if my kid meets the dependency requirements for more than one taxpayer? So this is the divorced couple that I'm telling you about, and everybody says we had Joey, and this is exactly one half of the year. Nobody's done the log, so we don't really have any proof. If one of the parties, say it's a mom and a grandma, both say we get Joey and Susie, well, the parent gets it, they have precedent. If both parties are parents, then the one with whom the kids stayed the most days in the year can claim them. But now I can't ascertain that. It makes sense for the kid with the parent with the highest AGI to take that, because obviously they're the higher tax bracket, so the write-off's going to be more beneficial to them, him or her. Yeah, really what you want to do when you get a divorced parent on that is talking about, they've got kids, you really want to see the divorce decree and see what the custodial parental language looks like. Okay, what if I want to take a dependent for somebody that does not qualify as my child? These are the 5 tests. They've got to be I have to have some sort of relationship with them, or a member of the household. The kid next door really lives with me. Dad's absent, mom's an addict, kid next door really lives with me. He's not related in any way, shape, or form, but he's a member of the household. He doesn't have gross income in excess of $4,050. He's 8. I supported him. I fed him, sheltered him, I bought him school supplies, I took him to soccer lessons. I got him on chips. He's not getting a joint return, he's 8. And he's a U.S. citizen. Guess what? I can take the kid next door. Okay? When somebody tries to do this, you have to ask a whole lot of questions, because it's not a normal situation for people to take on more than 50% of the support of someone they're not related to. But it definitely does happen. It's not an untenable thing. Nope. Okay, so what happened there?
What's the multiple support agreement?
A multiple support agreement is like my sister and I support our mom, and or my sister and my niece and I all support my mom, and each of us want to take her as a dependent. Right? That you can craft a multiple support document, legally. Where does it have the screen on that? Oh, do we not have a screen on it? You can craft it. You can craft a contract on it. I think you've got to be the majority. The majority of the people that are part of the contract have got to assign the dependency to you. So, for example, say there's 5 siblings or 6 siblings that were each supporting a parent. 4 of the 6 would have to concur, because nobody's paying a majority of it, right?
would have to concur, and really it makes sense to give it to the highest AGI person. Okay,
Let's do a couple more slides, then we're going to stand up and stretch, and then we're going to transition to our tax return projects. Here's your screen on your standard deduction and your exemptions. This is the same as what's the inside flap. Okay, this is what we were talking about earlier, but it's a couple more examples, and these are worth doing because they're kind of complicated. Now, it's the deduction for a dependent, standard deduction is the greater of $1,050 or earned income plus $350. But only up to the basic standard deduction. So what if I have my 10-year-old son and he just inherited a chunk of money, generation skipping transfer from his grandpa, and he has this year $4,500 of dividends. He's 10, so he doesn't earn any money. He got dividends of did I say 4,500? No. 4,500. What's his standard deduction? The greater of 1,050 or earned income plus 350. Does he have any earned income? No. Standard deduction is 1,050. Does he have to pay tax? Sure. What's your next question? If I tell you he's got $4,500 in dividends?
What would be his rate?
Exactly, and what's going to determine what his rate is?
Well,
Whether the dividends are what? Qualifying. Are the dividends qualifying? If the dividends are qualifying, then they fit on that schedule of lower rates, don't they? And I can tell you, just because I know this, you wouldn't without being able to look at the matrix, but if he had $4,500 in dividends, 1,050 of standard deduction, then he's got 3,450 of taxable income. That's the 10% regular rate, and he's going to pay 0 on his qualifying dividends. If they're not qualifying, then he's going to pay 10%. So, Jamie's 23, her parents claim her. She earned $2,000. She gets a whole $2,000 as the standard deduction, right? Because earned income plus 350. Technically, it would be 2,300. Tia is 18. She has dividend income of $1,500. How much is taxable? Okay. Greater 1,050 or earned income plus 350. She has no earned income, 1,050, so she gets tax. She has TI of 450. You see how these work? Let's try one more example on paper. I've got a daughter named Hanley. She's got interest income of $700 and a W-2 of $3,000. What's her TI? She's got interest income of $700. She's got a W-2 of $3,000, and she's my dependent. What's her TI? I concur. Let me see if I can put on the magic little document camera and do this real quick. That would be great if this works today. I'm not going to bet the family farm on it, but we can try. Okay, that's a good start. We think it should autofocus, right? Nowish. Focus.
Try selecting where you want it to focus.
Okay. Oh! Oh, Elizabeth. Cool. So, I'm just doing this for giggles to see if we can. So, earned income. Oh, I have to look at my hand. What did I just say? 3,500? What'd I say? 3, that's a W-2. And then interest, which is unearned income, was 7, right? And so we have to subtract the greater of 1,050, or earned income, which is 3,000, plus 350. Right? That's what the screen said. So 3,350, she's got TI of 350, right? Okay, now things really work. This should go over to half. I'm supposed to be able to split the screen here. Don't get too cocky, huh? No? That's okay. One thing at a time. I'll take it. Okay. I'm going to kind of pop through this, not so critical right this second. We've talked about capital gains and losses, Schedule D, capital assets, stock funds, land, cars, anything held for investment, special rates. The one thing I didn't tell you, that I should have, that's very important, is it's totally dependent upon how long you owned the capital asset. Long-term capital gains and losses are treated differently from short-term capital gains and losses. Long-term capital gains and losses are for assets you've held for 12 or more months, and those are the ones where you get the special rates on them. If I buy some Tesla stock and sell it next week and make $20 a share on it, short-term capital gain. That's treated just like ordinary income. It's taxed at the same rates as my highest marginal tax bracket. Both of them are limited to $3,000 a year in losses.
Is that to ensure that it's like an investment?
Day traders.
Yeah, day traders, anything, or even like, I buy an apartment complex that's in foreclosure and flip it in 2 months. I'm not in it for a long-term capital gain rates are meant to incent long-term investments, not short-term flips. And then here is the promise matrix. So what this says is if I am in, how many tax brackets were there again? 7. There's a new one added, I keep saying 6, but there's 7. 39.6 is the new highest tax bracket. Although honestly, probably by the time this class is over, well, I'm assuming that Congress actually can have something, but by the time this class is over, there's a 40-60 chance that most of this will be us. That's an exaggeration, but will definitely be changing. So if you're in the 10 or 15% bracket, what are you paying your capital gains and qualifying dividends? Nada. It's a nada. Okay, 25 to 35% tax bracket, you pay 15% on your capital gains and qualifying dividends. And if you're in the highest bracket, you pay 20%. Now, what does that mean? Special higher rates for really super high income people. Did I talk to you? I did talk to you about this on Thursday. Does anybody remember? It's part of the ACA. Okay, the 0.9% is for earned income. Over 250 if you're married, filing joint, 200 if you're single. There's an additional, I think it's, I don't, only one person that pays this because Montanans on the whole, for my clients on whole and high income. A 3.8% like surtax on something called NUI, your net unearned investment income. So if I only have interest and dividends, I don't have a W-2. I inherited $30 million. I cash a check for a couple million a year, and it's all interest and dividends. I have NUI, and I'm going to pay a surtax on that, on top of the income tax brackets. Okay, and I talked about the capital losses. Carry forward, get familiar with that term, carry forward. Okay, that's going to refer to anything that's desirable that you can't use in this year. Can I carry it forward or can I carry it back? How would you carry something back if you've already filed a tax return? You'd amend it. Okay? Good.
Okay, so I want you to see if you can figure this out, and an amount realized is what you actually got. So he bought some Sony AAA bonds in 2016 for $47,600. That same year, he sold them for $51,500, and he paid a commission of $515. How much did he actually realize? $50,985, right? Which is the sales price minus the commission. That's how much he got in his hand. Was the broker took his or her $515. What was his basis in the bonds?
47.6.
The 47.6. Therefore, what did he realize as a gain or loss? 33.85 is correct. Does he have to recognize all that? In other words, does that all show up on his tax return? You see any reason it wouldn't? We took the commission off of the amount realized. Okay, so no, there is no reason that recognizing and realizing would be the same. And let me just make a statement that we'll learn in chapter 2. Here's what tax law says, Rule 101. Everything's taxable unless it's specifically excluded. Some people go like, is blah, 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 you know, I sell some hay from my back 40, is that taxable? Yeah, it's not specifically excluded. Is barter income includable? Yeah, because it's not specifically excluded. So that's the rule. What's the type of gain or loss? Short-term capital. It's a short-term capital gain, isn't it? Short-term capital gain, is that taxed at ordinary rates or capital rates? Ordinary, because it's short-term. If it was over 12 months, you would tell me what? Long-term. Then it gets those preferential rates. That's not right. It's short-term. 2016, 2016. Okay, here's the what I basically just said, the two laws that were impacted as partial funding mechanisms for ACA and the ATRA was the net investment income on unearned income over 250 and 200, and the 0.9% Medicare, same thresholds. Does your employer match the 0.9%? No, that's just a solo tax. Oh, this is worth knowing too. And we won't get into this until some chapters down the road. But both itemized deductions and exemptions phase out. In other words, that needs to start to go away for higher income taxpayers. And so, again, I've got one client I think that itemized deduction phase out around here because the numbers are high, like, I don't know, 300,000 plus if you're married by insurance. But at any rate, be aware of that. We'll have a couple tax returns that are high income, and you'll do your manual recap and be like, what the heck? How come I calculated it at $26,282 and my Schedule A doesn't give me that number? All the way at the bottom, you'll see a little, something like HOPO, high income phase out or something. And it's not important now, but just keep that in the back of your head. Okay. All right, so did you guys get through your manual recaps? Okay. We are not going to be e-filing in here, obviously, because we're not doing real tax returns. But I don't know what the percentage is. It's got to be 75% or more of folks that file now e-file. I just started doing it 3 years ago for being like a total non-wasting person. I also love that security of hard copies of things. I still keep a hard copy working file for all my clients. So if you scan and email me all your docs, and I know it's all in recycled paper,
but I print them and keep hard copy working files. It just, if you call me 16 months later and have a question about something, I don't want to have to go 16 directories deep on my computer, or maybe that computer's crashed and I gotta find the hard drive. I want to pull out your file and I want to see exactly what it did. So the e-filing, you can e-file through your tax preparer, you can e-file on your own, you can e-file directly with the IRS and Montana Department of Revenue. And 80% it says of all individuals now e-file. So it's a big deal. It saves a lot of time and money, that's for sure. All right, manual recaps. What? Let me just pull up a manual recap. I asked you to do the first two, is that correct? Okay. Where am I here? Manual recap. Okay, so did we get through the one with Linda? We started Linda's, right? Okay, so all she had, if memory serves, is wages and salaries. And then I think that we have put a line item in here for educator expenses. But I don't, well, we'll have to see when we get it in the software. I think that actually went away. We used to get $250 a year for educators. I think that went away. What was her standard deduction? $6,300, $4,050 for her exemption. And therefore, what was her TI? How much? So where did we go then to find her taxes? Which appendix was that? So Appendix A in the back of the book. I think that the tables go up to $100,000 of TI, and then you have to go to a chart to calculate, just like we did with the payroll taxes. It goes to a certain amount to show the holdings, and then you have to go to a chart. But I can tell you at this rate, I think her tax is going to be 10%, isn't it? 1,290. What did anybody get her tax figured out?
I thought I did, but I gave her the 250, because I thought you said 750.
Okay.
But I, yeah,
Okay, so
because I got 12 grand too, but that was with the 250.
with the 250 taken out. Okay, well, let's just work with that. And again, when you do these manual recaps and then you get on the software and put it in, I mean, especially because you're just beginning, the odds of your manual recaps like ever matching shrinks are going to be pretty minimal, frankly, because you're just learning. Okay? So are you supposed to go scratch everything out on your manual recap and start again? No, you aren't. If you give me manual recaps that actually equal your tax return, I'm going to be very suspect. That will say to me that you either went back and did the manual recap or you didn't do it up front. So let's say this is the tax. She doesn't have any credit, so it comes down here. And she didn't have any other additional tax, like SE tax. How much did she have withheld? 1608. So she gets 408 back, right? No, 308. 318, thank you.
I must have gone to the wrong, because I got a tax of 1471 from the Davis. I must have worked wrong.
Did you? So maybe she does actually maybe she straddles the 15%.
Well, I got 1475 from the tables, but then 1471 was from the calculation on the front.
Okay, yeah,
So
gosh, I
it
hate
put all
that.
the difference, but
Okay, so those charts in the front of the book should equal the tax tables, but you'll see like a differentiation of a couple bucks. I think the software picks up the table of the calculation number. If you're $2 or $3 off, honestly,
like $4. 1471 was the
Okay.
calculation.
Thanks.
15% minus 460.
So she does straddle up into the 15%. Okay, thank you. So 1471, yes, so she's not going to get very much back. 129 plus 8, 137. Okay. Let's, for those of us that can, go on to Pro Series. For those of us that can't, you're going to need to sit by somebody that can. Because I want you, or I mean, I guess you can watch it up here, but, yeah. So how many people can actually just go on to Pro Series right now? Everybody except for you three. And you have some weird firm administrator.
But we don't have this. Yeah.
Okay, well, I'm gonna forge ahead because we kind of got it.
And I'm assuming the transfer last year, $5.
There are, you have no last year's class. Okay. So, let's go ahead first and just kind of look at the actual, dashboard. The only thing I think you're going to do under tools is go down to options, and I'd like to give you guys a chance, to write this down, those of you that aren't on the software. I know you can also listen to this too. But you're going to go down to tools and options, and under firm and prepare information, it should have Missoula Collagen as the firm that you're working for. That's what I set up and invited you to join. Under prepare for code, you put in your initials.
If it doesn't have a zero college signature, mine doesn't. Yeah, mine doesn't.
Sure. Can you get into that grade
On the
out?
bottom of the message from ProSeries on the main screen, it said, click here to, is required to activate your ProSeries.
Yeah,
Right.
product licensing
And then
requirement,
it added all the information.
so you can click on that and hold it.
Yeah.
Oh, and that's what the customer number is. There's this. Under the messages in the lower left-hand corner.
Where's this message
where's
from?
the person
Oh,
that
okay.
says product licensing required.
Down here?
Yeah, and I clicked on it and it added all the information.
Okay.
So mine-
And again, I've never had to go through all this. We just go on and just start. So like,
What is it?
we're 45 minutes. The customer number's up here, 770-233-9610. And then the zip is 59801.
See that on
You don't have a message?
Wait, hold on. Oh, got it.
Okay. So in Pro Series, you tab between fields. So you're entering your preparator code. I'm putting in LS. I'm associated with just it defaults to firm number 1. I'm not printing my name in the signature area. You have to sign all of your tax returns. I'm entering my name. Oops. I'm not self-employed. Make up a social. Let's see, prepare tax ID. That starts with a P and is followed by, I think, 6 digits. Just make it up. I mean, you don't make it up, you have one. You apply. To do income tax returns, to prepare taxes in front of the IRS, you have to apply for it annually and pay $67 and get a PTIN, Preparer Taxpayer ID number. That's about 4 or 5 years old as well. I think we can leave, let's see, the email and empty, print the date on the return, you want to do that. Nothing under electric filing or electronic filing. And then, oh, you do have to put in your phone number too, but just make something up. And okay. Okay. File new client. So first off, just stick with me here. Let me show you a couple things about how you access, how you get around it. So let me just get everybody's attention because this is really important. You don't enter anything in the 1040. Everything comes from input screens and is summarized on your 1040. Okay? You can get to your worksheets, like it defaults into your federal information worksheet where we're going to put in, name and address and phone number and age, and you have dependents and all that. That's in this. But I could also get there from my forms screen on the left. And when you look at common forms, you can see there's actually some of the schedules we talked about, A, B, C, D, E. But there's also input forms like a W-2 worksheet and a 1099 worksheet. So you can go in that way. If you know where you want something to show up on a 1040, but you don't know how to get to it, you can go to the 1040, and then there's a little magnifying glass on each field, and that'll take you to the input form. Or, and you're probably not sophisticated enough to do this, but sometimes when I can't find something, I'll go up to the forms up on the dashboard and be like, where's the 8839? Like, I know I want that form and I can't find it on my side thing here. For most of you, you're going to be looking down here. And this should look very familiar. Oops. Income. And then hit the adjustments, the plus, and deductions. Credits, taxes, tax payments. These are all the summary areas where, if you're trying to enter something, if it's a deduction or an income, right? Or if it's a higher credit, or if they need some estimated payments, go look for the input screen on that side panel, okay? So what do we need to enter? Well, let's get Linda's information in. So now we're back up here. Let's just start getting our information in from the case. Tab between fields, all caps, no pennies. No, that wasn't that, was it? 6. Date of birth. If I don't give you dates of birth, which I don't think I do on most of those, I just tell you how old she is. She's 27. We're filing a 2016 tax return, so you need to back into her birth date. I think that would make it, what, 89? Let's make up a date. I think you're required to have one phone number in there as well. Now, when you get down, fill in her address. Okay, so these two fields are both new, both of these quick foods. Because of the proliferation of identity theft, I've been both of my clients now
You've got to go in and enter a special code that the IRS sends you through snail mail, and it comes in 2 different envelopes. And that's the only way you can file your tax return. So if you've had your theft mucked with at some point, you no longer can file your tax return just under your own social security number. You've got to get, and it's a 2-pronged snail mail process. It just comes in plain white envelopes. In my life, that would get thrown out or in the recycling in a hot second. But you need to know they're coming, and there's no printing on the envelope. That's where the information you put in the identity verification worksheet. We have them here, but just be aware of that because it's very, very common. Second thing, healthcare entry sheet. This is your segue into potentially up to 4 different forms that you have to complete in one way or another to comply with the Affordable Care Act. I think that I told you in the introduction that we're going to assume everybody has got coverage, which is mandated by law, either through your employer or the exchange or Medicare or whatever. So let's go into the healthcare entry worksheet, and we're going to say, yeah, everybody on this tax return was covered by health insurance all year. And then, how do I close this? Pardon me. Where's my back?
If you click exceed, it'll take you right back.
If I what?
If you hit exceed.
Oh, to information worksheet. Okay, usually there's a back arrow up here. Okay, so that's this. Filing status. How's she filing? Here's her 5 choices. She's single. Does she have dependents? No, but let's look at these because the next person will have a dependent. This one can be tricky for people. Lived with a taxpayer in the U.S. If you've got somebody, a full-time student, that's your dependent, you still put in 12 months. Okay, because otherwise the software's not going to acknowledge that they're really your dependent. The only other things I think that you need to know in here, if you've paid tuition and fees on them and you're going to want to get a credit, you've got to check it here for the other forms to come up to make you able to input for them. And if you've got child and dependent care expenses, can you see how I'm reading this? Like you can see here, there's 3 fields, and they're 1, 2, 3. See how that kind of. This is if I pay daycare bills, and that will bring up, you don't know the number over in that chapter 4, but it'll bring up your form 2441. So my point is, what you put in here will allow you access to further forms to put in data about like tuition or childcare or things like that down the road. But we don't have anybody here. So we don't have anything in there. Okay. Then, really, I think the only other things you have to do down here, did your initials default in here? Okay. We're not electronically filing. We're not direct depositing, although almost all my clients want direct deposit now. Let me also just say from a practice management standpoint, I hate that piece of it now because I've got people's banking information. Okay, so that's really a whole nother element of security. Now, I would see more and more people like myself that are just like little individual practitioners that the security issues are what finally is going to get us. You know what I mean? It's a lot. Okay, pay by refund. Oh, this is a whole nother thing. I've never done this, but that you can do where I take my fee out of their refund. I don't do any of that, but you can do that. I think H&R does that. Okay. This is if they want their account zapped for the amount they owe. So I owe $9,000. Come take the money right from my account on April 15th rather than, which if you're filing electronically, you can't send a check. So you kind of are all in. Okay, so we're going all the way down to, somewhere in here is the states. Part 11. What state am I a resident of? Montana. We're only going to do full year residents, but if you've got somebody that has moved to Montana halfway through the year, or has left Montana and moved somewhere else halfway through the year, this is not the guy that goes up and works the crab boats in Alaska for the summer. They retain you don't become an Alaska resident for 4 months. He's a Montana resident without a state income. So he's still a full year Montana resident. And I think, we're not going to, this is all practice management, your client letters, your fees, your billing. We just honestly don't have time to do all that. Now, when we get to the bottom, she's only got 2 pieces of data. What are they? She's got a W-2, and she's hoping to take her educator expenses. How are you going to get into a W-2? Which of these categories would you look at? I'd probably just go right to wages, and I'd see W-2 worksheet. Create new copy. So enter the name of her employer. I don't think I gave you the employer's number, so just kind of make that up. It's as many digits as a social. And like with this basic stuff, if I don't give you every piece of information, just pop something in there. Oh yeah, I've seen that. And some of my zips don't equal the states because it just started doing that a couple years ago. Okay, definitely if this is your spouse, okay, in all of our situations and in my practice, the guys are always taxpayers, the women are always spouses. It doesn't matter who makes more money, you're blah, blah, blah. It's just a way to keep it straight, okay? So, but she's single, so you're not going to hit spouse. But on the next case, I think case number 2, they're married. So you've got to make sure, because for married filing separately on Montana, you need to say who goes where. And if you know that it's just like a little part-time job, they're not going to have it next year, then you would click on the do not transfer. And you always want to automatically calculate your Social Security wages and your tax withheld and everything. So go ahead, put that in, automatically calculate, enter her wages and tips. And did I give you, I don't know if I ever ended up updating this. Does she still make $23,000? Change that super low. And then income tax. Okay, what does it do? It obviously sees that she hasn't capped. It filled in her OASDI wages, her Medicare wages. On a full W-2, you would have information. She's probably in a retirement plan as a school teacher. The only other thing we've got to get put in with her is her state income tax. And she had $963 withheld. And I think this is like a 6-digit code. Okay, should we go see what's going on with the 1040 now? Do you want to take a look at your 1040? You can go right back up here to Common Forms. Okay, the first thing that you always do is you review all the basic data, Social Security number, address, no typos or anything. I'll be really harsh with that because if you get a tax return back social wrong or something, it's not going to look very credible, is it? Okay, so review that you've got all your input like you wanted. If your input's not like you wanted, can you change it here or do you have to go back to the worksheet? You go back to the worksheet. Okay, so I think that all looks good.
So you can't really verify the source of the start then.
Oh, yeah, good point. So you have to do that in the,
You can click on it.
okay, and here's that little magnifying glass I was talking about that takes you back to your source. If you want to see where did I put this in, that's how you get back to your source.
So that's when you go and make it.
Yeah,
Or you can double click on it.
yeah. Yep, she's single. Yes, I've only got one exemption. Okay. Salaries and wages, just where I would expect them. Now, I'm really reviewing this, you guys, this 1040 against my what? My manual recap. This is your first review mechanism. So, I'm looking, of course, she didn't have anything else. This is super, super easy. Oh, look at, here's educator expenses. How am I going to get her $983 in there if I don't know what form that goes on? What should I do? Can I just go click here and go to my, see the source? Educator expenses worksheet, K through 12. You spend your own money to take supplies into a classroom. What did she have, 983? No. 952 out of pocket. Kind of thought that had went away. And then I look down and it says, oh, okay, so I put that in. I don't know anything about it. I'm just new in my tax class. I go back to my 1040 and it only puts in $250. Where would you go to verify what the heck's going on? IRS.gov, the instructions for the 1040. And it will tell you clear as a bell on line whatever we're on 23 that it's limited to $250 a year. Okay? So those instructions are going to be kind of your Bible, your go-to now. Okay, let's pretend that we look at all this. Backside, of course, we got $6,300 of deduction, $4,050 of exemption. Here's my tax. I believe these are the same numbers we just put in the manual recap together, $1,608. And here's my $133 refund. Life is great. Now, next step. You've got to go up always and hit your check errors. I don't have any errors, but that's probably about the only tax return we're going to do all semester that you're not going to have errors. You're usually going to have a ton of errors. You have to go clear every single one of those errors. How do you do that? You go on them, you click on them, let's say there's 4 of them. You click on them and then the box is grayed out right now. If you go to error, it'll take you to the form where there's an error. And it will try and make your way through what the error is. I can't really tell you how to do it because we don't have any errors up there right now. A lot of this, students, is going to frustrate the heck out of you, but I mean, there's something like 8,300 input forms. And some of them will have 6 pages. I can't tell you how to do anything other than so much of this is just going to be, you know, kind of mucking around on the software yourself. And the minute you learn this, you're going to go to work for somebody and they're not going to use the software at all. They're using something else. So the point is, are you flexible? Are you easy to, try and authenticate with a new piece of software? Okay, so I'm just trying to finish up here because we've only got 8 minutes left. So here's your steps. If you're writing down steps, input all your data, your source data. And I would use that pane on the left, that, where it said incomes, adjustments, deductions, credits. Because you don't know what an 8863 or a 2441 is. You will, but you don't now. So enter what you think is all the raw data. I will tell you there will be a million input fields that you won't even know. Recharacterization of Roth IRA data.
the hell's that? If you don't know what it is, there's a really good chance that you just skip it. Do not try and answer every question. I start with really easy data. Like that W-2 worksheet was like 3 pages long, and we only filled in what? Income, FIT withholding, and SAT withholding. Then, check your 1040 to your manual recap. That's step 3. And you really need to resolve any discrepancies at that point, because something's wrong if they don't equal. It could very well be that you did your manual recap wrong, in which case, cool, my 1040 is fine, my manual recap's just wrong. Or, no, my manual recap's absolutely right, I screwed up on my input. Then go up to the error message, the little yellow triangle, and clear all your errors. At some point, you have to say, I feel pretty confident that my federal tax return is correct. Now you can go where? You can go to your state, and your state is right up here, ST. So this says FED. It's grayed out right now, but there's an FED and an ST. Here's my ST, and we've only loaded one state, Montana. And all the Montana forms are just listed out because obviously there's a whole bunch less. MT2 is like the 1040 for Montana. Now, close this. In a very simple tax return like Linda's, I'm going to tell you what to do. You don't have to try and equalize income because she's not married, right? So the first thing you need to go down and do is make sure, now I can give you actual line items, that your federal AGI on line 38A is the same as the federal AGI that we just looked at on the 1040. Okay? And it is. Then, as I told you, for Montana, you may have some additions and subtractions. For Thursday, I want you to look in Montana at both your additions and subtractions. If you can't get it into the software, if you don't have that resolved, you go to I left you a link on Moodle, right, that takes you to the Montana Department of Revenue Schedule 2 booklet. I want you to look at the different additions and subtractions so you have sort of a feel for what kinds of things we plus and minus on Montana. Some are really obscure, some are fairly common. So when you add and subtract Montana stuff, you get to Montana AGI. As I told you, the deduction, standard deduction, and exemptions are different for Montana. You will check these numbers against the booklet. Again, the link is posted on Moodle. And you will use the tax tables in the booklet. One thing you have to check here is very carefully on Montana is line 55. Did you get in the SIT withholding? And then lastly, here's your tax, your refund or due. And then here as well, you have to go up and do your error check. And no, I didn't have any errors. Close. Last item in the last 2 minutes, to print your tax return, you need to go back to federal. File print. And you're going to print both federal and state, but make sure to unclick that federal forms for state, because that will just reprint your federal tax return, which you
have to by law send in with the state one, but we don't have any reason to replicate that. So make sure to get that off. And print. And you've got to have money on whatever the name of the software is, print. Paper cut or whatever it is. Okay, for the three of you, do you, go ahead.
I'm getting errors because it's updated on this one too. It doesn't have the state one, and it also says that the availability needs to be, this thing is not.
Okay, so update, just hit, yeah, I'll
You
update.
have to have a, you need that added password for the computer.
And that's a computer.
Computer.
Okay,
Software.